Hey, what is up, guys, and welcome back to the channel. So if you're new here, go ahead, hit the like button for me, hit the subscribe button for me, and let's get right into this video. So in this video, we're going to be talking about a possible stock market collapse and when it could possibly happen. This is one of the first things that goes through a stock investor or a stock trader's back of their mind is just always sitting there. They're thinking about, hey, are we going to see some type of collapse, a crash, or anything? And as a good investor, as a good trader, you always have to have a plan in the back of your mind, just in case something were to happen. I believe it comes down to all being prepared and being ready for it in case it does happen. And we're going to talk about this in depth because, as I said, I don't think anybody has done a really good job breaking this down in depth. And when I break this down in depth, you might be thinking to yourself, what is my plan? What is my solution? You should always keep that in the back of your mind if you're thinking about investing in the stock market, or you're currently investing in it, or you're trading. Okay, you should always have a plan. Now, let's talk about this. Okay, historically speaking, all right, a lot of the slow ups end up happening in the later half of the year. Okay, so when we're looking at this chart right here, what you're going to see is in the past 5 years, most of our slow ups, okay, boom, have been in like the early part of the year or the very, very late part of the last year. It's usually winter. Okay, you're going to see this little crash happen right here. Okay, late December. All right, you're going to see another one happen kind of early in the year right here, January all the way down until March. Okay. And you're going to notice this kind of pattern happen right here. Once again, January, February, March, boom, crash. So these more or less little crashes or small pullbacks or whatever you want to call it happen a lot of times in the early part of the year. And why is that? Well, once Christmas is over and the holidays are over, a lot of times what ends up happening is the market starts slowing down. Okay, it's a time where everybody has spent their money. They threw their money into buying gifts for relatives and everything else, and now they're more or less at a slowdown. They're at a point where they're saving money, where some people even may be laid off here in this early year. And we're going to talk about layoffs here in a second, because that's also a really important topic to talk about when we're going through what our country is going through at the moment, and what the entire world is going through, to be honest. This really makes it interesting when you start breaking this down on a chart, because when you start really breaking this down, you're going to notice that a lot of these crashes are late in the year, right? Like you'll see right here in 2008, we started collapsing in December, right? Same exact thing, guys. It almost always happens in that last little bit of the year or right into the next year. And due to the fact that we've been sitting flat for a while, this chart here, if you notice, we've been sitting what's called flat. It does lead to possible indications of a pullback in the market. Is the pullback going to be significant? Well, we're going to talk about that and what the possible pullback could be if we were to see one. At the moment, I'm going to tell you a personal plan that I have. I'm keeping about 20 to 30% of my portfolio size in cash. That way, at any point, if I wanted to go ahead and launch more money into the market, I could. But we're going to talk about my exact plan here in just a second, that you might find very, very interesting. If you stick around to the end of this video, you're going to find out how I could possibly pull off a 5 to a 10x on that. So let's talk about this. All right. So we also have a market slowdown in the inventory on more or less the housing market. Housing market has been in a slowdown all of 2020, basically, and it's all been slow. It's all been kind of just dragging along. And as inventory is slow, those houses that do come onto the market are normally going off pretty quick for the most part. They're not staying on the market very, very long. So yes, the housing market is limited. There is definitely a slowdown because without people being able to, because like the thing is, you got to think about this, right? Right now, you have a lot of renters that aren't able to pay their rent. Okay, so the people that own the houses, right, the leasers or whatever, um, they they really can't go anywhere, right? So they don't want to really throw those people out on the street, because obviously they're supposed to be getting money from the government to help fund this whole thing along, and that's, renters are supposed to be covered by the next stimulus. However, uh, there's a lot of issues. There's a lot of issues in the housing market. So these people that are renting out their homes, they can't really do anything, right? The people that are leasing, they're kind of stuck in that lease and not able to move, and a lot of those people don't have an income, or on a very low income. So it's kind of this stagnant market, right, where not a lot of inventory is moving, but the inventory that does come onto the market tends to move pretty quickly right now. Okay, so we're in an interesting market. I don't know if we've ever seen this before in the past. Once again, I didn't study the housing market, more or less. I study a lot of the stock market, but it's interesting to notice other markets also having a little bit of a struggle, as well as our economic status as well. Let's jump into a couple other things. I think this is really important to add, okay? Now, we've talked about stimulus before on the channel. I haven't really covered it in depth, but this is interesting, okay? Last week, Congress proposed a new bill, okay? It basically was giving Americans a $600 check, and basically, in a sense, was a crash course stimulus package where a lot of the funding went to other countries and not to Americans. Well, Trump threw a fit, said this bill is crap, and he vetoed it. Okay. And I don't blame him. There was literally hundreds of millions of dollars to literally third party uh, organizations that have nothing to do with anything COVID related. Like there was gender stuff being done for Iran. Like what? Like guys, this is about helping the American people, not, you know what I mean, doing something for uh, gender discoveries in another country, as great as that sounds. But yeah, this is more or less about um, taking care of what needs to be taken care of. You've put a lot of people out of jobs. You've made a lot of people suffer. Now it's time to fix what you've done. Pick up the pieces that you broke, and that's basically, in a sense, what this entire article says. And I agree with it. I think that the bill that was passed is not it. I mean, I'd rather you not pass a bill at all than send out $600 stimulus checks. Like, what's that going to do for someone that pays their rent for maybe a month? Maybe a month. Like, dude, that's not going to do anything when these people have been out of work for 9, 10, 12 months. Like, come on, you're insulting them. Absolutely insulting them. But anyways, let's jump into another quick topic here that I think is really important to cover. Okay, now all of the last stimulus, the acts that were put in place are starting to run out. Okay, if you're not aware, it was called the CARES Act. Okay, it established multiple programs up until the expiration date of December 31st. I don't think that's accurate. I believe it was the 26th, but I may be wrong. But it basically stated that these people got unemployment benefits. Okay, they got a couple of other benefits, and basically they were covered by forbearance for a while. Okay, meaning if they were to fail to pay their mortgage or their rent right now, they're kind of covered. Okay, in a sense, they're not allowed to be evicted at the moment because we are in the middle of a pandemic. However, this stuff has started to run out, which now you see where we have back in 2008. Okay, let's take this back a second. Back in 2008, basically what you had, the problem was people were giving money, right, to, well, more or less getting homes that they didn't have the money to pay for. Okay, and they were all on what's called um, uh, variable rate loans. And basically, in a sense, variable rate loans can change based on the market's status. And now you have people who have never, were working at McDonald's maybe, who are making $15 an hour back then, or $12 an hour, whatever, owning 3 houses because their income wasn't getting checked. This stuff wasn't strict enough, and it caused a collapse. Okay. Well, right now we're sitting in a kind of eerily similar situation because we have basically a bunch of people put out of work, then a bunch of houses where people obviously are renting from them, and now you have these people who own the houses not getting paid, but yet they still have to pay banks. You see where that gets really interesting, because this could end up being a collapse of the economy if something is not done because of the way it's set up. It's very eerily similar to the 2008 crash, where it was caused by housing. And this could end up being another housing crisis again because of the fact that we have renters who are supposed to be paying people who own the houses, which those people can't pay the banks. So now we have this 1, 2, 3 effect where you have basically a trickle down where renters can't pay owners, can't pay the banks. And once again, could end up causing a similar eerily collapse. It is something to think about and keep in the back of your mind, but however, it is definitely interesting to think about for now. As we go ahead and we have more and more of these benefits run out, it's going to be interesting to see how the economy reacts to this. But I'm going to explain to you here in a second why it's not that bad of a scenario, like how you can make money. So I talked about this before on the channel. Remember how I said it's not necessarily always when you sell that you make money. A lot of the money that you make on stocks, on houses, on anything that you want to appreciate and value over time, a lot of that money is made when you buy. Okay, so when you buy, you end up making a lot of that money, which leads me back to basically the concept of, well, if we were to have a crash and we kept 30% in cash, we could go ahead, launch it into some high growth stocks, and we could see them soar, right? Now, here's where it gets more interesting. A lot of the high growth stocks are what moves faster in the economy, right? So if it moves faster up, it usually ends up moving faster down as well, which is interesting because high growth stocks and stocks that people are a little bit less sure of yet end up usually taking bigger hits because of the fact that people want their money safe, right? They want it to be in the safest thing possible when something happens, when they get scared. And you'll see all the money flow into like a Coca-Cola or a Johnson & Johnson or a GE. And it's interesting to watch that happen, but it happens when you see a slow up. Like anytime we've seen a slow up in the past, I want to say several months, you'll see an allocation move from high growth stocks over to those slower moving companies. And the reason for it is because, as I said, people want to be safe. They want their money to be safe. Now, where this leads to a great opportunity for people like you and me is where we think the opposite way. Okay, when everybody is selling and everybody's getting out, we buy in. Now, however, as I said, be careful with this, but I'm going to show you a little trick of something that I've been studying. Okay, so here is my plan. All right, TQQQ is basically a NASDAQ index fund. Now, this is going to get interesting, guys. All right, the last time we seen a crash, okay, in the NASDAQ and the whole stock market, this stock dropped to $35. And basically what this stock is it's a weighted index fund, okay? And if you don't know what index funds are, you can look them up. I'm not really going to cover that in depth in this video. But the reason to note why this is so interesting is because it's weighted. When it goes up a lot more. When it goes down, it comes down a lot more. So if we were to see some sort of crash, some sort of push down in the economy where the economy ended up more or less getting hit pretty hard, this is where I have a very interesting plan. So we don't necessarily need to wait until, remember, okay, we're not waiting until anything goes to the bottom. We don't want to call tops and we don't want to call bottoms any patterns, right? When we're trading, what we want to do is we want to wait for something to start an uptrend, and then we go ahead and we buy into that trend, right? Whether it's an uptrend or downtrend, it doesn't matter, right? But we wait for a trend to form first, right? Right now, we're technically still sitting in an uptrend, so we would not necessarily want to buy here because we're high, and we've not rebounded off of anything recently. Okay, this was the best buy that you probably could have got here, and it was too quick to really get a great entry on. But however, if we were to see another crash like this, here's my plan. We wait until we start seeing some consolidation like we saw here, okay? And then once we start the uptrend, we buy and we hold, okay? Now, as I said, this is my plan. This doesn't have to be your plan. This is just my plan and something that I think could work out really well for us. So if we were to buy and let's say we were to get a good position, and let's say it wasn't the best position, okay? Let's say we didn't get $35. Let's say we got like 40, let's say we got like $54 a share, okay? So we got in for 54, not bad, okay? Well, now 54 till here, we saw a 3X, okay? But here's where it gets more interesting. I don't know if I would necessarily just buy in stocks, okay, in shares. This might be something that I would actually put options on, and I would option trade this and do some calls on. Maybe I wouldn't do a ton, but I could definitely see myself doing like a $3,000 option on something like this if we were to see another crash similar to what we've seen previously. And that's where, as I said, this stock gets really interesting, because if you were to see a let's say something around a what is this drop? Let me see this really quick. I think it was like a 70 or 80% drop. If we were to see a drop of that magnitude and we were to put options on it, the amount of money we would make back on a return like something like this would be absolutely ridiculous. However, as I said, this is something where you're playing with fire a little bit. So you have to use caution, you have to be careful, and you have to make sure that we have actually a solid indication that has created an uptrend, okay? We don't want to just throw money at the wall and be like, okay, all on black, because guys, that's not how investing works, right? We're not going to the roulette table. We're not heading to Vegas, all right? This is investing, all right? This is making an educated guess and a very educated determination of okay, the NASDAQ has gone up over the last whatever years, and we've had a 40% drop, okay? A 40 to 50% drop means that on average, we're very likely that it's going to come up, right? Because on average, the hardest drops in history have only been 40, 50%, right? Besides the Great Depression. I mean, that was like a 80% drop or something crazy. Yeah, this is something that I could really see a long-term option play to be something of significant value, because if you're already seeing, let's say, a 3X on this, well, we were to put options on it, we were to see a lot more than a 3X. And that's where it would be probably like a $3,000 play for me. I would probably throw like a 5 or a 7% position in there, and I would just let it ride. And I would sit there for a while with some long expiration date. And I believe that we'd see some very good long-term appreciation out of it. But yeah, that's basically my plans. Let me know what you think about my plans and what your plans are for a stock market possible collapse in the comment section below. And as I said, guys, if you did get some value out of this, please go ahead, hit the like button. It would help out the channel greatly. Hit the subscribe button. And if you didn't, go ahead. There's a link below where you can go ahead, sign up for 4 free stocks. Go ahead, get those below. And until next time, guys, see ya.